Today, Bitstamp plans to wind down Ether staking in the US. Prosecutors accuse the founders of Tornado Cash of laundering more than $1 billion. And the CEO of Ethena Labs explains the firm's USDE stablecoin that it claims won't rely on banks. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are back in the red this morning. By noon Eastern, Bitcoin dipped back below 26K, Ether dropped to around 1642, and at the same time, Solana's in the green today, rising to $21. Okay, let's talk about the top stories. U.S. prosecutors just charged the founders of Tornado Cash with laundering more than $1 billion, including millions to North Korea. In a newly unsealed indictment, Roman Storm and Roman Semenov were both accused of sanctions violations and laundering money through the Tornado Cash platform. Now, that indictment also alleges that Tornado Cash failed to implement Know Your Customer or anti-money laundering rules as required by law. Storm was arrested in Washington on Wednesday, but Semenov, who's a Russian national, remains at large. The FBI's James Smith told CNBC, quote, "We're treating this like any other fugitive now. We will work whatever avenues, whatever we need to do to arrest, whether it be domestic or international." Next, FTX wants Mike Novogratz's Galaxy Asset Management to hold onto its stash of crypto assets. In a Wednesday court filing, the bankrupt exchange asked the judge to approve the draft plan, which would allow Galaxy to manage the holdings, including hedging and staking. FTX's argument to the court was that allowing staking would generate low-risk returns for creditors on otherwise idle digital assets. According to FTX's most recent interim report at the end of June, the firm had recovered around $7 billion in cash in crypto. Last up, crypto exchange Bitstamp plans to stop Ether staking in the US. Bitstamp told us the change takes effect on September 25th and that the evolving regulatory environment in the US is the reason for the move. In February, rival Kraken settled with the SEC for $30 million and announced that it will shutter its US staking operation after the US regulator said the crypto exchange failed to register the offer and sale of the digital asset staking as a service program. Now, earlier this month, Bitstamp said that it would halt trading for 7 crypto tokens in the US, including Solana's Sol token and Polygon's Matic token, because of recent developments. All right, let's talk about stablecoins for our main story. I spoke to Guy Young, the CEO of Ethena Labs, about the stablecoin landscape. But first, I asked him about the firm's internet bonds and Ethena's own stablecoin, USDE, which the firm says is not reliant on banks. So Ethena is a project offering internet bonds and a new stablecoin. You just raised $6 million in seed funding. I'm wondering if we can start with just having you walk me through the products and specifically why is now the right time to launch a stablecoin?
Sure. So I guess the inspiration behind what we're doing was actually based on an article that came from Arthur Hayes, which he posted in March of this year. His core idea was trying to create a stablecoin that truly existed outside of the banking system. And the way that you try to sort of construct that was being long crypto on one side and then you would short a derivative on the other side. And so those two things coming together sort of create a synthetic dollar position, which looks very different to the stablecoins that you'll be used to, whether that's USDC or USDT, where functionally what's happening there is you have a bond sitting within a bank account and you're essentially replacing those US bonds with crypto collateral sitting within the crypto ecosystem. So fundamentally, they're very different products because they have very different censorship sort of profiles where you have crypto assets in the crypto ecosystem. That's very different to sort of having bonds sitting within a US bank account. And so the idea here is that you're creating a product that's actually crypto native and that crypto people can sort of depend on when you see events like SVB or what happened with Paxos earlier this year.
How does USDE address some of the concerns raised in the wake of Terra USD, for instance, where it sort of felt like the takeaway for many people is that cash is king?
Yeah, no, I think it's a perfectly valid question, and I think it's the sort of right questions we should be asking after what we sort of saw unfold through crypto in the last sort of couple of years. I would say that sort of the idea and the genesis behind the whole idea behind Ethena and USDE actually came in the wake of Terra Luna's collapse. So Arthur Hayes wrote that piece just after Luna had gone down, and it was sort of an idea and a proposition to sort of say how we might actually be able to do this in a more safe and secure way going forward. And so I'd say the real core difference between what's sort of being constructed with Ethena and what happened at Luna is the type of collateral that's actually backing the stablecoin itself. So Luna, if you remember, was backed by something that looked like an equity token behind the stablecoin itself. And so that's obviously an extremely volatile asset. And when you're backing a stablecoin with something with extreme volatility, there's always a chance that that's going to become unbacked at some point. The core idea that's sitting behind USDE is that we're using crypto collateral on one side where you're long Bitcoin or Ethereum as an example, but you're taking out a hedge on that collateral so that you're reducing the volatility to zero. So you might be long $100 of Ethereum on one side and then short using a perpetual swap on the other. And the idea there is that you're using the collateral and you're creating something that has zero volatility versus Luna, which is obviously extremely volatile. So there are sort of key differences there, but I think it is worth sort of digging into why they are different, because they do look very different in many ways.
And in terms of timing, you've got PayPal newly entering the stablecoin space. Of course, you've got Circle and Tether, who are your OG players. Why now for you guys? What made you choose this moment to jump in?
Yeah, I think it was actually some of the news events that you've seen over the last few sort of months and through the course of this year really just re-emphasized the need for a product like ours. So if you remember during the SVB collapse of this year, or when Binance's BUSD was shut down this year, really that just re-emphasized the need for crypto to have a stablecoin that was within its own system. Sort of the core value proposition that we bring is that crypto is trying to create a parallel financial system, but like the most important instrument, which is a stablecoin, is still completely tethered to existing banking institutions. And so really everything that's going on in crypto has that centralized weakness by sort of depending on stablecoins that aren't within the system. And so all sort of the news events we've seen this year, I think, just really highlighted why a product like ours is needed. And we sort of see the competition that's going on between some of the names that you mentioned as really quite different to the product that we're offering, because they really are competing for sort of regulated onshore stablecoin products within the US. And we're sort of, nothing that we're doing is sort of touching the US in any way or touching US users.
Now, looking more broadly at the crypto market, investor interest and liquidity is way down right now. You come from a background in traditional finance. What do you think will spur the next wave of investment in crypto, whether that's institutions or retail traders?
Yeah, I think it's always a sort of a builder. It's something that we just focus a little bit less of our time thinking about. It's sort of, I think we all accept that there are cycles in crypto. And I think actually when you're building a product, it's actually a better environment when prices aren't going crazy and you haven't got sort of manic headlines every day. It's not something that I'm particularly worried about. I think it's something that does naturally come as you see acceptance with some of the headlines that you've seen with ETFs, for example. That's a very obvious flow that can come through into the market. And then I think some of the pushes around getting regulatory certainty, whether it's around stablecoins or other products, that obviously just unlocks and enables institutions to come back into the market where they may have stepped back on some of the news flow we saw around FTX, for example, last year. So I think it's one of those natural things where ETFs look like a very positive news flow. That's just going to take time to sort of flow through into the market. And then I think naturally, depending on where you sort of see the rate cycle evolving going forward, crypto is naturally a pretty speculative product where when rates in the real world come down, you naturally sort of see flows back into this market. So it's probably a question of when the rate cycle starts to turn and if people have an easy access into the market. And I think ETFs are a very sort of clear and obvious example of that.
Okay, that's all for Crypto World today, but we will be back again tomorrow and we'll see you then.